The most powerful woman in the US Congress, Nancy Pelosi, has been cashing in on investments in big tech, the companies she's also busy regulating. That's the revelation of a new investigation by journalists. Breaking down the story for you, here's RT Zili Petrenka.
Well, did you know that the top Democrat in the House is also a top-notch stock trader, a true talent, together with her husband? A bit of Pelosi math for you. Her personal wealth stands at nearly $115 million, which is quite an increase from $41 million in 2004. Good for her. One very important disclaimer. I'm in no way saying Madam Speaker is doing anything wrong or breaking the law, but I'll be moving on to a combined lesson of Pelosi math with a touch of Pelosi ethics. For that, let me refer to an investigation by journalist Glenn Greenwald.
Much of the Pelosi's, added wealth is due to extremely lucrative and lucky decisions about when to buy and sell stocks and options in the very industries and companies over which Pelosi, as House Speaker, exercises enormous and direct influence.
Oh, there's so much context to dig into. It turns out close to 3/4 of the couple's stock trading over the last 2 years has been in big tech. And I'll tell you what, right at this point, the U.S. lawmakers are in the midst of revamping legislation that could really make life much more difficult for the tech giants. They're working on something called the antitrust reform that would propel market competition while taking its toll on monopolies. So, have a guess which super powerful executive has made a personal call to Madam Speaker to talk the House out of proceeding with the reform. Apple CEO Tim Cook. And what about the company in which the Pelosi's traded most often? It's Apple, accounting for more than 17 of the family's trading volume.
Trading has always been controversial because it's basically a victimless crime. No one is hurt by it. And the only argument against it that could be made, and the one that has been made, is that it reduces faith in the securities markets. This entire episode, where Congress has been engaging in what the rest of us would be thrown in jail for, shows that it's regulators and Congress, not markets, that are not worth the public trust.
Nancy Pelosi may well not be receiving any insider knowledge from the companies she's regulating. Even if she does get some of it, maybe she never uses it when trading. But she's apparently very close with these big tech CEOs. In the meantime, a bill that's supposed to fix a loophole in the legislation that favors these very knowledgeable executives has been revived on Capitol Hill.
Corporate executives shouldn't be allowed to trade on significant information ahead of the public and investors. But that's exactly what's happening because of this legal loophole.
Oops. So for God knows how many years, big bosses with close ties to very powerful people on the Hill have legally been able to get away with what looks very much like insider trading.
Insider trading is supposed to be handled by the Securities and Exchange Commission, but since those officials are approved by Congress, and since Congress makes the laws that apply to itself, where every year Americans are treated to the spectacle of Congress giving themselves raises, for example, it's reasonable for Americans to strongly doubt that anything lasting is going to be done. Insider trading can be regulated, and it has been for the common person, yourself and myself, but like so much else Congress does, and the securities regulators do, they enjoy the privilege of exempting themselves when and how they want.
Whether it's fair to allow lawmakers to get richer from buying and selling stocks because they know stuff that nobody else does has long been up for debate in America. Well, experts often come to the conclusion that current laws don't give prosecutors a chance.